Hi all and welcome to another edition of the Week Ahead Report. We have a very busy week ahead which starts with fairly light calendar on Monday. On Tuesday, Eurozone GDP data is due. This is a preliminary reading forecasted to come in at 1.1%. If you're trading euro currency crosses and European equities, be prepared for some volatility. On Wednesday at 1:30 in the afternoon, US ISM manufacturing data is due. At 7 o'clock in the evening, Fed interest rate decision rate, and also 30 minutes later at 7:30, FOMC press conference. If you're trading US dollar currency crosses and US equities, be prepared for some volatility. On Thursday, Bank of England interest rate and also minutes are due at 12 o'clock. At 12:30, Bank of England's Governor Carney is due to speak. Volatility ahead for sterling currency crosses and also UK equities. The week will finish on Friday with the release of Eurozone CPI data, which is expected to come in at 1.6%. More importantly, at 1:30 in the afternoon, we will receive US unemployment, non-farm payroll, and average earnings, which will likely increase volatility across a range of the markets, but in particular US dollar currency crosses and also US equity indices. Now, let's take a look at few markets. This is the intraday price action for Eurodollar. Eurodollar has been under pressure with stronger US dollar recently. In particular, once we lost this sequence of the lows and the support, it's a psychologically important support at 1.12 level, nice and round number. The price action dipped lower and it's currently bouncing off the lows from the oversold market conditions, but it's capped by initially 111.70 and more importantly by that 1.12.05 level. If the price action creates some sort of bearish continuation pattern, maybe a bear flag or an oversold bounce back in a shape of rising wedge, or a pennant, which is then rejected at that 1.12 level with renewed selling pressure, bears will still be in control, potentially targeting initially 1.11, 1.1070, 1.10. Some more bearish traders working in end of day time frame or weekly time frames are potentially targeting even lower, 108, 107.60. Alternatively, if we see a spike higher and a confirmed breakout above that 1.12 level, I would be keeping an eye on this falling resistance trend line and this area up here at 112.50, 112.65. So only a spike into that level and the end of day close above that 1.1260 would negate the current bearish outlook, and that'll probably be triggered by maybe US dollar weakness, which would then change the outlook, potentially opening up the way for a spike higher towards 1.13, cluster of these highs, breakout above that level, 1.1360, possibly 1.14, 1460 to the upside. Sterling dollar also appears to be bearish. We had a coiling price action. If you remember, we were connecting the sequence of these higher lows and then lower highs, and then we were saying energy is building, price action is coiling, there'll be an explosive reaction, which is what we got here as well, with the confirmed loss of this 1.1330 level, 3030. The price action is currently testing some supports around 1.29, 1.2950. Very similar situation to Eurodollar. If we see an oversold bounce back and a spike into that 1.3030 level and the rejection from that level, that would be fairly bearish, potentially targeting 128, 127.50, 127 to the downside for sterling dollar. Alternatively, if we see a spike higher and end of day close above this zone up here, 1330, 1385, so it's about 50 points in there, so the daily close above that level would likely negate the current bearishness, potentially opening up the way for the retest of 1.3170, possibly even 1.3310 on the upside. Dollar Japanese yen is nicely uptrending, supported by this rising support trend line in daily and 4-hourly time frame. But a 4-hourly time frame appears to be rejecting 112, 112.30 area, and we are seeing a corrective pullback lower. So I would be keeping an eye on dollar index as a result of FOMC press conference and interest rate decision, which is expected to stay unchanged, and also a reaction to non-farm payroll for the clues to what dollar yen might do. But if we see this continuous selling pressure, a loss of 111.50 would open the way for a deeper retracement towards 111.15, possibly even 110.80, which would be a cluster of these previous lows and also S3 in pivots. So pullback, retest of the rising support, and then bulls would likely return to that level to try and defend it for a spike higher. Alternatively, if we see the end of day close below 110.80, that would negate the current bullish outlook, potentially targeting 110 to the downside, which is signified by this significant low. Alternatively, either a shallow pullback and a rally, or a rally from the current levels and a breakout end of day close above 112.10 would also be seen as fairly bullish. Then this would become a bullish continuation pattern, and a breakout to the upside could open the way for the retest of 112.35, 112.75, 113, 113.50 to the upside. Crude oil is very nice and bullish, but we saw this massive corrective pullback on Friday, and now the price is retesting this longer term and fairly embedded rising support trend line, which we can create by connecting the sequence of this higher lows. Obviously this is a fake out, there's a flush lower, but loosely connecting it, multiple touches, projecting it to 62.60 support, which is, if we look at to the left side, points to this consolidation here, this little bull flag breakout higher. So bulls need to defend this level vigorously in order for the price to go higher, potentially returning above 64, 65, 65, 66. Only the end of day close above 65, 66 would open up the way for the retest of 67.20, 68 to the upside. Alternatively, if we see a flush lower and retest of 61, and then retest from underneath of this rising support trend line, which then becomes newly found resistance, would negate the bullishness, potentially opening up the way for a deeper retracement towards 60, possibly even 59. Lastly, let's take a look at gold. We talked about gold in end of day time frame earlier this week with the topping head and shoulder pattern forming here and a significant neckline at 1285, 1290 level. The price action is currently trading below that significant neckline support, and it's now testing it from underneath in something that appears to be a rising wedge, which is a bearish continuation pattern. If we see a bearish reaction to this 1285, 1290 area and renewed selling pressure below that level, especially the loss of 1280 retest from underneath and selling pressure towards 1268, 1270, 1260, possibly even 1240 will come in play as a downside support. Some more bearish traders would be measuring the move by measuring the distance from the top of the head to the neckline and then extending it down at the loss or a breakout level, and that points to 1220 over a longer period of time, bear in mind in daily or possibly even weekly timeframes. Alternatively, if we see a spike higher and end of day close above 1290, that would potentially negate the bearish outlook, spiking towards 1300 and retest of that level. Now, if we connect the sequence of this high and then this high and this high and project it as a trend line, that brings us to the same level. Only the end of day close above 1300 would completely negate this topping head and shoulder pattern, and then it would morph into something else, opening the way for the retest of 1310, 1318, 1322, possibly even 1346 to the upside. Thank you for watching, thank you for listening, stay safe, happy trading, and talk to you soon. Bye for now.